Welcome to this session of ZICA Academic Tutorial. In this lecture, I want to examine diluted earnings per share in IAS 33. If you are coming across my lecture for the first time, please like the video, also share it with others. If you are a returning subscriber, I say thank you for being part of this channel. So, what do we mean by dilution? Dilution. To dilute something means to mix it with water, to water it down. When you dilute, you water it down in order to reduce its strength. Therefore, dilution means watering down or reducing in strength. Watering down or reducing in strength. Where the entity have potential shares that may be converted to ordinary shares in future, the entity must compute the diluted earnings per shares in addition to the basic earnings per share. Where the entity have potential shares that may be converted to ordinary shares in future, in addition to the basic EPS, the entity must also compute the diluted earnings per share. I've told you that diluted mean or dilution, or to dilute mean to water down or to reduce the strength. So what are the potential shares we are talking about? Potential shares. Potential shares include 1. Convertible bonds. Convertible bonds. 2. Convertible preference shares. Number 3. Shares options or warrants. Share options or warrants. These are potential shares. Where the entity have any of these potential shares, they must compute the diluted EPS in addition to the basic EPS. Note, not all the potential ordinary shares are dilutive. Not all the potential ordinary shares are dilutive. Only those ones that will reduce the EPS, those ones that will lead to reduction in EPS are dilutive. So remember, diluted earnings per share mean the reduced earnings per share. So now we want to examine the convertible bonds in the diluted earnings per shares computation. Convertible bonds or convertible loans or convertible debentures are those loans or debentures that can be converted to shares in the future. So remember, the bondholders receive their own return in form of interest. So if you want to compute earnings per shares, remember you need two variables: earnings per share. One of the variables you need for earnings per shares computation is earnings. I've told you that earnings mean profit. Earnings. The second variable is weighted number of shares. Weighted average number of shares. These are the two variables you need for EPS computation. But for convertible bonds now, convertible bonds, I've told you that the bonds holders or bonds holder receive their own return in form of interest. That interest payable to the bondholders will cease. You know, if bonds are converted to shares, the moment they become shares, or the moment the bondholders become shareholders in that company, they will no longer be receiving interest. Interest payable to them will stop the moment the bonds is converted to shares. So now, the earnings now, earnings, I'm referring to this number one variable. Earnings now will comprises the profit or the basic earnings. Basic earnings. The profit given in the questions. Then the interest payable to the bondholders now. Interest on convertible bonds. Since this interest will cease, it will be added to the earnings. That means the earnings will increase because the interest will no longer be payable to the bondholders. Then remember, interest usually leads to tax savings or tax relief. So you can have tax relief on interest. You have to deduct the tax relief on interest. So this will give you the earnings that will be used in computing the diluted earnings per shares. The second variable is the weighted number of shares. Weighted average. Weighted average number of shares. So you have the balance brought forward, the existing shares before conversion. Let me put existing shares of the entity before the convertible bonds. So number of shares converted. That is the number of shares that the bonds will be converted, the numbers of shares that will be used to exchange for the bonds. So we have this. This is the weighted average number of shares that will be used in diluted EPS computation. Steps for computing the diluted earnings per shares. The first step is to test for dilution. The conversion option that will give rise to higher shares is the one that is dilutive. Note, the convertible option that will give rise to higher number of shares should be used. The convertible option that will give rise to higher or greater number of shares is what you should use in computing the diluted earnings per share. Number two, compute the adjusted earnings. Remember, I've told you for convertible bonds, to compute the adjusted earnings, you have the basic earnings, that is the basic profit, plus interest given up on convertible bonds, then tax relief on interest. And this will give you, if you remove the tax relief on interest, this will give you the adjusted earnings. And the third option is to compute the weighted number of shares. The third option is to compute, option 3, compute the weighted average number of shares to use in diluted EPS computation. The final step is to compute the diluted earnings per share. Diluted EPS. So these are the steps you need to follow when you are computing the diluted earnings per share involving the convertible bonds. Example, a company had 8.28 million shares in issue at the start of the year and made no new issues of shares during the year ended 31st December 2024. But on that date, it had an issue $2.3 million convertible loan stock converted between 20x6 to 20x9. The loan stock carries an effective rate of 10%. Assume an income tax rate of 30%. The earnings for the year were $2,208,000. The loan stock will be convertible into ordinary shares as follows: 20x's $91 shares for $100 nominal value loan stock. 20x7 $85 $1 shares for $100 nominal value loan stock. 20x8 $80 $1 shares for $100 nominal value loan stock. 20x9 $75 $1 shares for $100 nominal value loan stock. Calculate the fully diluted earnings per share for the year ended 31st December 2024. So you want to compute the diluted EPS. I have told you that the first step is to test for dilutive. Which of these will be dilutive? I've told you the one with the highest, the conversion options, that will give you the highest number of shares. I said that is the one that is dilutive. No, $90 shares will be exchanged for 100 nominal value loan stocks. If you have 100 loans, you'll be given 90 shares. If you have 85 loans, 85 for 100 loans in 2007, if you want to have for your $100 loan stocks, you'll be given 85 shares. In 2008, your $100 loan stocks will give you 80 shares. In 20x9, your $100 loan stocks will give you 75 shares. Which of the conversion option will give you the highest number of shares? So you will discover that it is the conversion option in 20x6 that will give you the highest number of shares. Therefore, this conversion option is dilutive. So this is the option that will be used in computing the diluted earnings per shares. That is the first step. So I've told you you should test for dilutive. So in our test, we've agreed or we've concluded that this option is dilutive because it will give you the highest number of shares. So step 2, you want to calculate the adjusted earnings. Calculation of the adjusted earnings. Adjusted earnings. I've told you earnings mean profit. So the basic earnings given in the question. How much was the profit the entity had? The earnings for the year were $2,208,000. That is the basic earnings. $2,208,000. I've told you the interest on the loan will be given up. So how much is the interest given up? The loan holders or the loan providers will forfeit the interest on the loans once the loans are converted to shares. That is why that interest will be added to the earnings. And how much is the loan interest? The loan stock carries an effective rate of 10%. The rate of interest is 10%. And how much is the total loans? You were told. But on that day, it had in issue 2.3 million convertible loan stocks. So the total loan is 2.3 million. So the interest will be 10% of 2.3 million. So we have 10% of 2.3 million loan stocks. That will give us 230,000. Then we deduct the tax relief on interest. Tax relief on interest. The tax rate. Assume an income tax rate of 30%. So the tax relief on interest will be 30% of 230,000. 30% of 230,000. So we have 69,000. If you remove that, so the adjusted earnings now 2,208,000 plus 230,000 minus 69,000. So we have 2,236,369,000. This is the adjusted earnings. Adjusted earnings. Then the next working is the calculation of weighted average number of shares. The existing shares of the entity. A company had 8.28 million shares. Let me have that as balance brought forward. Balance brought forward. 8,280,000 shares. Then the convertible loans. Convertible loans. No, the conversion option we go for is 90. 90 for 100 loan stocks. 90 in place of 100 loan stocks. 90 shares for 100 nominal value. So it is the nominal value we normally have in the denominator. Whatever you have at the nominal value of the loan stocks, that is what we will always have in the denominator. And how much is the loan stocks? 2.3 million. But on that date, it had in issue 2.3 million convertible loan stocks. So we have times 2.3 million loan stocks. So 2.3 million times 90 shares divided by 100. That gives us 2,070,000 shares. 2,070,000 shares. If you add it to the existing shares of 8,280,000 to 8,280,000, so the total number of shares becomes 10,350,000 shares. So that is the weighted number of shares. Now that we have gotten the weighted number of shares, we can then calculate the diluted earning per shares required. So diluted earning per share. So the adjusted earnings, which is $2,369,000 divided by the number of shares, 10,350,000 shares. That gives us 2,369,000 divided by 10,350,000. So that gives us 0.2289. Let me just say $0.23 per share. So that is the diluted EPS of the entity. This marked the end of the solution to this question. In my next video, I will examine options and warrants in diluted earning per shares computation. Please drop the love emoji, like the video, and also share it with others. Thanks for watching ZICA.